Welcome to Cycles TV. This session of the Market Cycles Report is intended exclusively to provide information and education to help individuals better understand cycles and the markets. However, this information is not to be construed as professional advice as to the buying and selling of securities. In no event does the host express any opinion with respect to, or make recommendations regarding, the purchase or sale of any particular investment instrument. There is a very high degree of risk involved in trading. Buying or selling decisions are solely within the personal discretion of each individual. And now, enjoy the show. Here is your host.
Welcome to the Foundation for the Study of Cycles. My name is Lars Fontin. As always, Monday, time for Cycles TV. Let's do some cycle analysis here live together. Thanks for joining. We are live. I will pay attention to your questions. As always, latest at the end of the session. What's in the box today? I want to have a special review of cycle analysis using Apple stock market cycles. And there's a special reason for that, because, and as you've seen in the highlight of this video, I think cycles in Apple at the current point in time could guide us through the market, especially in the tech environment. Maybe not for the overall market, but if we look at the tech sector, Apple can really guide us here because the cycle analysis really seems to be promising. And why? That's the topic for today. So during the next 20 minutes, I will explain you first why I think cycles in Apple are that important right now, based on the historical analysis and the way we did it here on this series. So the first 15 minutes is about education. It's about the variation of cycles, the dynamic nature, and why it is important to monitor different cycle composites. And I will review them in the first 10 to 15 minutes. And at the end, so in 15 minutes from now, I will do a live analysis of the current Apple stock market cycles, which is a clue for what to expect in the markets in general. Okay, so that's the topic for today. Let's get into it. Why Apple? Why Apple? To discuss this topic, we need to go back into the past just a little bit. And if you remember, this is a screenshot from the video back in August last year. And I'm just repeating this so that you can dive into this analysis on your own if you like to. And if you want to study cycles, I highly recommend it because there's a lot of learning. And it was the first time I presented here an individual stock cycle analysis using Apple price. First of all, I repeat this very often here, but that's very important. Normally, I do not recommend to analyze individual stocks in individual asset classes based on cycle. For sure, you can do this, but you need to understand the data and the asset you are analyzing. Because often the noise level or individual stocks are influenced by news, media, or single events by a very large degree. And if this is the case, this will make time cycle detection and analysis very hard to do for any algorithm. So you need to use data and a stock or an asset class where there's a lot of volume in, which represents a lot of market capitalization and is not based on single events, or the movement is not based on single events. And all these criteria apply to Apple. I think it's the largest market capitalization. If you look at the S&P stocks, it has a huge trading volume. And I think Apple is not influenced by a single news media, so it's a real broad investment here. So that's the reason it makes sense to look into Apple. And that's what I did the first time with the cycle analysis back in August. I will not reveal all the details, but you see here at this point in time, we talked about the possible top here in this cycle at the point of the analysis, with the projection that we would expect the Apple stock to move down into the end of the year of 2022. So we had this main projection here. And let's switch to the real cycle analysis based on that point to complete that idea here. Okay, that's gone to, I think now it's back here. So that was the exact analysis, sorry, we did here in August last year. Where's my window? I've lost my window here. I need to recall my window. Give me a second. My screen has gone off. So here we are. And that's the chart I'm talking about. So let's, sorry for that. The important point to remember here is that we had 3 dominant cycles, and this is what we need to recall while we are going now through the analysis. This was based on the 3 dominant cycles you see here in the spectrum. So that's what we're always doing. We're looking for the key peaks in the spectrum if you're new to cycle analysis. So there was long-term cycle, which was a very flat plateau. So this cycle was not used. We used these 3 peaks here, 178, 136, 30, and 80. So these 3 peaks are clearly separated in the spectrum. The only reason why I did not use this one here was because this is a very flat plateau here. If you look at it from the left rising peak here and the right descending peak here. So the length is not very exact given here, while the separation of these 3 cycles in the spectrum is very clear in regards of the amplitude and separation to the left and the right. So, and I mean, a one-time analysis is not always something you can trust right from the start. So you need to monitor your different analysis you are doing, how they, how accurate they are, because this was ahead of time. And then we updated this analysis as we stepped through the past year. And we learned a lot by following this analysis, because if you remember then back in August, and let's bring this up again now. Back in October. So then we went into October. Wait a second. Yeah, here. Sorry for that. So then in October we did an update of this analysis. So this, you see here the date of the analysis. This was an October live session here of the Market Cycles report. You see the light blue data is data which has come into the cycle analysis after the fact. We did not update the composite plots here based on new data. We just have been at an interesting point in time doing that. So the downtrend really was working out well, as you can see here, based on the downward. But then Apple moved sharply to the upside at that point in time here, as we are in this analysis, and we discussed it live here in the session. And the market sentiment at that point in time was highly volatile in the overall markets. There was a heavy discussion about the increase of the Fed for different aspects here. So we have a high volatile market at this point in time, and we have been unsure if this is already the end of the down move, as another up move starting in the markets, and that's why we repicked this analysis and we updated it. And the learning at this point in time has been that we did update the chart exactly at this here back in October. And you see that, and now that's really important here, that the cycle length, which has come up, slightly changed. And that's the principle of variation. So before it was, let's go at the 176, 136, and 81. And now moving forward, 172, 135, and 79. So you see a really, really small, small change in the length of these cycles. But the other change you see here also on the chart is that the shape in general stayed the same. But this smaller period here, if I now go back in this analysis, you see here, this was a very flat period or sideways composite projection we saw here in October. So it was flat. So not really clear how to read this flat period. And if we have, as we have updated this cycle analysis, we still have the same cycles, slightly changing in length. But you see also that the amplitude of the smaller cycle now changed, which in turn just confirmed the up move after the fact. So it was not of any predictive value, as we just saw this up move now after the fact. But however, it did reconfirm us that not to expect a larger up move at this point in time here, because it still confirmed the composite cycle that we would expect a key down move still into the year, the end of the year of 2022. So it was just a reconfirmation that the cycles have very shifted around amplitude length, and it still gave us confirmation that I think here we did the projection here on the 10th of November, we would expect then this even shorter term cycle upswing come to an end, and then all three cycles resume into a downtrend period. And this was exactly what happened at that point in time. So at that given analysis, let's move forward. Cycles really turned down again. So, and after that point in time in October, yeah, that was the point we gained confirmation that this composite is really helpful, because it was not a one-time composite which just provided us with one forecast. We really updated it 3 times. The original forecast, then back in October with the updated data in October, confirmed that the upswing should end by 10th of November, and I think the 11th or 12th has been the exact high in Apple, and then Apple turned down into the end of the year, so it really dropped down. So this was the 3rd time we had confirmation based on this composite cycle. And if you see this behavior over a period of, I think it has now been then 3 to 4 months, so from August, 3 to 4 months into the period of December, that this composite cycle forecast really guided us very well against very noisy market environment, still always predicting a major drop of Apple into the end of the year. And not only have we seen the drop into the end of the year, so and now let's move forward to more or less the situation we are all interested in for today. So we saw the drop here into the end of the year, right? And I think Apple made even a new low for the year. So it really took out the former low here and really made the major low at the end of the year. But not only that, this updated projection here in December showed us also, and it was the whole time, so it doesn't matter where you look at this cycle composite, if you go in the past, it has always been not only expecting that Apple will move down into the end of the year, it was always since August last year seen that we could expect a major turn there. So not only projecting us that Apple will still continue to move down into the year of 2022 once we arrive at that point in time here. And it doesn't matter which forecast you pick from the period of August to December, it was then also highlighted as important turn where Apple will then reverse, or the cycles will reverse, projecting a possible up move of Apple. And we projected by December that we are close to this point, and the exact projection was the 10th of January for the cycles to turn up. And I think on the on the 5th of January. So don't count on me for the exact day. Apple just turned upwards. So it couldn't be a better projection of constantly updating your cycle analysis, confirming more or less the same rhythm to expect in a cycle. And I mean, this even worked as a proxy for the overall tech sector, yeah, for all stocks trading in this tech environment or asset class. And as it worked so well since August last year, guiding us through the market, while now, I mean, projecting the major low at the end of the year, we have now seen the turn in Apple. We have a very sharp up move during the last 2 to 3 weeks. So now let's update this analysis and see what the current projection of this data set is. And therefore, before I will show you've seen the outlook already, but let's do this live now with our cycle analysis tools. Let me just open the right screen here before I will jump into it. Yeah. So here we are. This is the current cycle analysis screen. If you load Apple daily data into the cycle analyzer, here you see the huge up move, which just started in Apple. And I mean, here you see the low. It's the 5th of January. I think you remember the projected low was 10th of January in December. So you could have prepared your trades during the Christmas holiday, and what a great up move we have seen here so far. So what's up with the cycles? This is today, or I think the close from Friday. No, it's today's close here. We see this is the current spectrum here. And again, I mean, there's no individual cherry picking here. You see 3 clear peaks in the spectrum. So therefore, let's read what the length of these cycles is. And you see here, even I would not use this very, very long-term cycle. And the reason for not picking them is we see a very, very flat plateau here. And if I'm talking about a flat plateau, I'm talking about that from this is a very flat here. So you really don't know what's the exact length here for this cycle. I mean, mathematically, the peak is here, but as the spectrum is very flat and we have a very slow decreasing to the left and the right, this is not a good separation you want to see. So for the new starters, what we want to see is these clear peaks with separation to the left and the right in a spectrum with a very high offset. So the offset of the amplitude is this distance here. So all other smaller cycles have this offset here, and these 3 peaks really stand out from amplitude and separation to the left and the right. So this is just the basic way how to read a spectrum and how to pick the cycles. The second criteria, as you are aware of this, is always then look at the Bartle score, which is indicated by the green triangle here. So 2 green triangles means we have good statistical significance of these cycles. Blue is okay-ish, so you can select it. If you see red triangles, you have very, very weak or bad Bartle scores, so you should not use these cycles here. So that's the basic behavior. So now let's check the length. What length do we see? The first one has a length of 82 trading days. And if you remember the original shortest cycle out of the analysis from August last year, the cycle length, I've written it down, was 81 days. So we have the same cycle still detected, which is good, which is a very confirming situation if you see the same cycle length in the spectrum. So therefore, let's for sure pick this one for a projection. I'm just clicking on the peak here in the spectrum. This activates automatically, plot the overlay here on the price chart with this cycle. Let's move forward to the second cycle shown in the spectrum, which has a length of 138 days. 138. And this is exactly the same length as we have seen in August 2022. So the same cycle, and there's no discussion about it. It's not 120, there is no cycle here. And it's not 140 or 50, there is no cycle here. So there's really no individual reading. It's a clear guideline, a clear framework how to read the spectrum, which I would try to explain to you. 138 days, still dominant cycle in Apple. So let's add this to our composite projection here. I'm clicking now at this peak in the spectrum. This will now add both cycles on top of each other, building the composite, which is now shown here in our cycle spectrum chart analyzer in the upper section. So, and now let's have a look at the third peak here, which seems to be important here, which has a length of 178 days. Yeah, 178. If you have it in mind, but I've written it down, the original cycle length first detected in August was 176. So 176 shifted to 178 cycle lengths. So here again, we still have the same cycle length visible over a period of over 6 months in a daily data set, which is not often the case. So therefore it gives more and more trust into this kind of analysis. So let's add this as a third cycle to our composite. And to be honest, there are not more cycles from the spectrum here, which I would add into an analysis. So again, there's no subjective filtering here. It's a clear objective framework, which I want to outline. So these are just shorter cycles where the amplitude is too low. And I have explained why not picking that. And by the way, never use more than 3 to 5 cycles in whatever composite. So it's a good way just to pick these 3. And now let's have a look at the projection out of this composite. That's why we are here today. So well, once we have done that, so this is also a way how to use cycle analysis. You can clear up a little bit the cycle analysis screen by going on this little icon. You can hide the spectrum and we can then make the result even larger and zoom in and out a little bit. So here you have it. That's the current analysis. So by the way, if you first have a look at the shape from the past, you see, I mean, that's no surprise. We see more or less exactly the same shape of the cycle projection we originally did here in August. Yeah. So you remember this shape of this cycle was exactly how it was shown since August. I mean, this blip here, yeah, changed as we have neared this situation here. But again, as you see now from averaging this the behavior, it was more or less a down move, sideways move, and then down move again. Yeah. So even though we had a lot of hiccup here, it really worked very well. The initial projection, which just indicated this sideways move here. But anyhow, we are now at this important point here, where I said to you, we would expect a low in Apple. Really turned out nicely here. And now the next important point we are all looking for is exactly here, which is then more or less March. Yeah. So that's always the point now we are interested in. Let's clear it up here. So here we're talking about March 2023. So let's say in 2 months from now, or for the next 2 months, it looks like there's an active upswing based on all of these 3 cycles. So not talking about just one dominant cycle here. You see, if you scroll a little bit over the composite chart, if you have a look here at these numbers, you see that the coloring changes. Yeah, so these are the active cycles which are used for this projection. And the coloring gives you the current phase of this cycle here. So the current coloring of the both orange ones with a green dot on the lower right means these cycles are currently turning to the upside, while the cycle with the length of 138 has already moved into the positive phase. And if I'm now hovering over the time axis here, you see that the cycle length stays, but you see the phase now, all 3 cycles are pointing upwards. I mean, that's the same while you see this upswing in the composite cycle here, but that's the beauty of cycles within cycles. All 3 cycles agree in their phase, yeah, which should give us a kind of indication expecting Apple to move up at least until March. Then the situation might change. And as this guided us as a proxy since summer last year, we can also use it to have this as a guiding principle, at least for the tech sector. So that's it. That's the very interesting and I think important analysis now using Apple as a proxy. And I want to quickly review and explain to you also why the past analysis was important and why, I mean, this is a good example of learning. While you need to monitor different assets and composite cycles, and once you see that some composites really play out and they stick out of other composite cycle, and so often you see composite cycles which are completely out of sync with your market. And what we did here was, on a weekly basis, more walk forward, a live projection. Yeah, we walked forward week by week, month by month. We reviewed our analysis, and it worked out. So the so-called walk forward analysis gave us more confirmation following this cycle analysis. And if you do this with different asset classes and different stocks in parallel in your own cycle analysis, you will always find similar examples, which give you then an idea which ones to trust and which ones even maybe not to trust so much. Okay, so I hope you got it for today. Why Apple? Why composite? Why from the past? And what's the current projection? So I think here you have it. So now let's take a look at your questions. So if you want, feel free to drop them in, throw them, and I will now have a look. So give me a second. Elliot, there are only blue triangles, major ones in this spectrum. I think you're referencing to the initial analysis of Apple. Let me see if I can recall it. Yeah, here we have it. I think that was the analysis of August, the initial analysis. And you're right, if you have a look here in the spectrum, you have blue triangles. So the Bartles score is in between. So it's not negative, but Bartles does not give us confirmation from an historical perspective. So blue triangles means the Bartles score, yeah, is not usable. So it's not giving us positive confirmation. It's also not giving us a negative confirmation. But Elliot, the interesting point here is, as I said, you can use blue ones, and there have not been any green ones, which I would prefer instead of. But as you have monitored stepping through August, December, and now also January, that the Bartles score has become green. Yeah, so we've seen the same cycles now stepping forward in time, and the Bartles score changed from blue to green. I think in October or latest December, they changed to a green situation. So there's another confirmation that the statistical significance increased over time of these cycles. So it gave you even not in the initial projection, but rolling forward this analysis and following price, we also saw that the statistical significance, which is then shown by the Bartles score, increased. Okay, Elliot, that's your question. So that's good one here, maybe to have quick view. Something is wrong. That's always in the markets. In the markets, always something is wrong. Financial stress implies upside. S&P implies upside, and VIX implies upside. Perhaps sharp drop ahead and then sharp upside. Yeah, I mean, we need to do this step by step here to review your points here. In general, the projection I showed here, you need to put them into a context of a long-term analysis. And one reference I want to make is the video last week, and the analysis we did here last week was a long-term cycles analysis. And you're right, the long-term cycle is still pointing downwards into September. I think you can review the session we had last week here. So even though the daily cycles model now shows us from Apple, not from an up move into March, the longer term cycle is still pointing downwards. So and maybe that's also what you're referring here to. I mean, the financial stress index, for example, is a weekly data set. And using weekly data set for long-term cycles might currently just reveal the longer-term cycles, which are more pointing down. But I don't know how you read it. So financial and VIX cycles need to read the other way around, because you're reading sentiment here, Daniel. Maybe you have taken this into account anyhow already, but if a financial stress cycle is pointing down, this means we are expecting an up in the market. So same for the VIX here. I will show you a VIX example in a second. And sharp drop ahead and then sharp upside. So what I'm expecting now, but that's just a personal view here. Based on this analysis, maybe I still expect a continuous upward movement, maybe until March, and then again a sharp drop to be expected into late summer based on the long-term cycles. And by the way, this is what I'm currently seeing on the VIX index. So therefore, maybe let's use the time, if you want, to show you the current VIX analysis. So the volatility index. I think I started to do that here already. So let's bring in the volatility index. So this is the current volatility index, live data. Yes, it is. And you see the spectrum here down below. So you could use 3 possible cycles here to build a forecast. 84, 100, 72. So let's pick this one here, which is the volatility cycle, just using the VIX index. Let me clean up a little bit the stream here, which is bottoming here and then expecting a bottoming here and then expecting a downward cycle into March. And this is now important to read. Volatility cycles are read exactly the opposite way from price movement. So a volatility low means a market top, yeah, and a volatility high corresponds to market lows. So you need to read them the other way around. So a volatility cycle low expected here for March would confirm a market top in March. So still having and the volatility cycle starting at end of January. So that's when the cycle turns down, which means then this confirms the technical cycle composite we've seen on the Apple. So this is a confirmation of an upswing into the period of March. And I mean, you asked this live. It's nothing I wanted to show today, but as you have asked now, let me show you another feature of the cycles application we will bring to your analysis live here. So maybe you have seen in some of the new features here, there's this chart button. And we want to bring professional and more analysis features here also in the cycle analyzer, so you can save individual cycle charts. And I have, but that was my own analysis, to be honest, nothing I wanted to share here. Here you see exactly, and I've shown you based on the cycle spectrum, the dominant cycle with the length of 84, right? So this is what you see here in the upper left. This is a composite cycle plot based on the length of 84 days. Yeah, I have just inverted this cycle here. So that's important to be aware of. So this cycle here, maybe you remember it, this cycle has now a top mid. Let me wait here. At the top here it is. No, it's not inverted. Wrong. That's exactly the volatility cycle here. Yeah, it's the VIX. It's not inverted. Sorry, I told you something wrong. So this is the cycle overlay to the VIX, the same as we have seen in the cycle analyzer here, pointing to a volatility cycle low mid-March, exactly the same. On the bottom chart here now, you see the S&P 500, and often it's more important to align the turns with the price chart. As I said, a cycle low in the sentiment cycle always corresponds to market highs in the market, and the other way around. Tops in the volatility cycle correspond to major bottoms here, as you see on the S&P, and you see how nicely this 84 day cycle in the volatility index worked out to fine-tune the tops and bottoms in the S&P 500. And this tells us that we would expect a low here right now and confirmation of an upswing into March. So that's the purpose of, if you want to bring in other cycles here. And you see you're commenting and I just need to update the analysis. That's now the difference between cycle analysis and market behavior. I don't care if it makes sense or not. It's pure cycle analysis, and the valuation of assets, that's a complete different way to analyze markets here. So Daniel, you might be wrong or right, and we are not judging here price in terms of valuation. The cycles we are using here are just for timing, yeah, and that's what I try to show you here. That's the beauty of timing past cycles, and maybe this might not result in a huge up move. As said, we are still in a longer-term downward cycle. Maybe we just see a sideways consolidation or a short up move, then a sideways consolidation, and then the downtrend will resume after March into September. So this is a possible scenario which I'm seeing here. But Daniel, I hope it gave you a little bit more confirmation, or at least to everyone out there, as I think your question is really, really important. Even though I was not prepared to do it here, as you brought up the question, I wanted to share here, because that's also what I'm doing here. So that's what I'm doing for my own, analyze different asset classes, sentiment, see if these cycles are in alignment, and then you can draw your own conclusion. Okay. Maybe yeah, okay, I think maybe just finally, as I see Charles, you have been joining, and the question is about the difference in between the subscription levels. So the basic membership comes with the basic feature set, and we also have an analyst subscription level, which is a higher rated subscription. And I agree, we have not really provided so much information what's about it. So for example, one feature is the chart analysis you're seeing here. This is for the analyst subscription. So you can have more beautiful charts, overlay cycles with price, using this interface to have also technical indicators on the chart while opening the cycle analysis or the composite. So this is one example what you get with the analyst subscription. Another important feature is the intraday possibility to use intraday data for your cycle analysis, which is only available once you upgrade to an analyst. And there's more to come, and I agree, I need to make more transparent what's the purpose here. But that's the main difference. So if you choose the analyst, you have intraday, you have more slots to save data, you have the harmonics module, you'll receive an auto composite feature, which automatically builds a composite for you. You don't need to pick the cycles manually. And you can have, for example, the charting features where I showed you the VIX overlaid with the price data. So that's one example here. Okay. Good idea for next week. I mean, maybe what I recommend as a homework, we are here for education, so you also get homework when you show up next time. And we will do this next week. What would be interesting, I've shown you the composite cycle model in Apple. So what really would be interesting if the same cycles can be revealed by analyzing the Nasdaq index instead of just Apple as a tech stock here. This would even give more confirmation. And I will now bring this in the session next week, Monday, same time, same place. So that's it for today. Thanks for joining me. Thanks for your questions. I always like to be live and get into your concrete topics. And in parallel on that, we always try to bring in some education and some real cycle analysis for educational purposes. I hope you liked the video. Please like, subscribe, tell your friends, join the cycle analysis every week, Monday, same time, same place. Have a safe and nice week. See you next week.